US stocks closed at fresh record highs on Saturday morning. Bond yields fell on dovish talk from the Fed about quantitative tightening. And the oil price spiked overnight after OPEC Plus and Russia extended their oil production cuts. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ's Head of Sustainable Finance, Katharine Tapley, tells us about demand for green bonds.
We've seen a landmark agreement to support vulnerable nations facing some of the worst of climate change impacts, and that's with the Loss and Damage Fund, which has commitments totaling more than $700 million.
But first, in 5 and 5 with ANZ, the S&P 500 closed up at another record high on Saturday morning after strong quarterly earnings results and a benign view of likely Fed rate cuts starting later in the second quarter. Stock prices were also helped by a fall in US Treasury bond yields after a Fed president talked about slowing down the Fed's pace of quantitative tightening. Meanwhile, overnight, oil prices rose around 2% after OPEC Plus and Russia confirmed the extension of production cuts of 2 million barrels a day. Brent rose $1.40 a barrel to $84.20 US a barrel. Gold also surged almost 2% to a record high of over $2,090 US an ounce, again because of those lower bond yields. The Aussie dollar was firmer against the US dollar at 65.31 US cents at 5 a.m. this morning, Sydney-Melbourne time, and the Kiwi was up also about 0.4% at 61.07 US cents. Number 2, markets will be watching 2 central banks this week for signs of easing, but without actual policy cuts. The Bank of Canada comes out on Wednesday night and the European Central Bank on Thursday night, ahead of US non-farm payrolls data on the jobs market in the world's biggest economy on Friday night. Here's ANZ's Group Chief Economist, Richard Yetzinger.
The focus will really be on what they're saying because both have reason to be shifting towards an active easing bias. Nobody expects them to be moving yet. Certainly we don't, and we have the ECB first cab off the rank in June. A bit like Australia, sitting here in the first week of March, June's feeling like a little way away, although for the ECB we probably limp there, I think. And then for the Fed, of course, payrolls will be crucial to this expectation about whether there's any chance of a start in June. We haven't put a lot of weight on that. Our expectation has been July and still feeling somewhat comfortable about that.
Number 3, China's Purchasing Manager Index surveys of activity in manufacturing and services in February were in line with expectations. ANZ strategist Xiaopeng Xing sees a few green shoots.
Both numbers are much higher than level seen last Q4. I think it signals that the China economy growth momentum is showing some earlier sign of stabilization. I think this is a good thing to say. Based on this, we expect the policymakers will be patient. Because of the data. I think the PBOC just cut the RRR 50 bips last month, so that we expect the PBOC will not eager to move at the next stage.
Number 4, rate cuts seem closer on the horizon in Europe and in Canada, but they look much further away in Australia, says Richard Yetzinger. Even though inflation data was weaker than forecast last week, it has only been 4 months since the RBA actually hiked.
The run of luck hasn't really gone their way because since then, certainly on the inflation side, it's been pretty much a consistent run of downside surprises and potentially, we've got a bit of time, a bit of wood to chop in the first quarter in terms of the data, but we could have Q4 and Q1 where quarterly inflation is around the top of the Reserve Bank's target band. That's sending a pretty strong signal. And at the moment, our call is the Reserve Bank cuts in November. November is feeling like a little way away though, isn't it?
Number 5. Watch out this week too for the annual National People's Congress in China. The party's leadership are expected to make decisions over the next 6 days on China's new GDP growth target, its fiscal budget targets, and its climate targets. Xiaopeng sees that GDP growth target potentially being lowered this year to 4.5% to 5%, from 5% last year.
The most important thing, of course, it will be the growth target of this year. The growth target play a very key role in China economy. Yeah, if the growth momentum slowed compared with the growth target, the government usually give some stimulus. If the growth number is higher than the target, I think the government will press the brake.
Zhao Pangjing there. Now, in our deep dive interview, ANZ's Head of Sustainable Finance, Katharine Tapley, surveys the outlook globally for green, social, sustainability and sustainability-linked bonds after a slowdown in issuance in late 2023.
It's really a reflection of contraction in global bond and loan markets that we've seen through that corresponding period. Interestingly, though, when you look at particularly the Q4 data for sustainable finance markets, we have seen a reduction across, again, between the first half and the second half of 2023. But I think what's interesting is that despite that weakness, green bonds as an instrument posted a new record and made up almost half of the total annual issuance. So we're talking volumes of USD dollars, I'm talking here, Bernard, of about 41.3 billion in green bonds during the course of 2023. And that accounts for almost 2/3 of the annual increase in total green bond issuance. So we think that probably reflects growing government momentum to fund energy transition initiatives, and we'll probably talk about it, but certainly energy transition was a very major focus of COP28 held in Dubai not long before Christmas. We did see some drop-off in loan markets in that format, so that green bond equivalent in loan format. Again, not driven by lack of desire around ESG agendas. It's more a reflection of what we've seen in loan and bond markets generally.
You mentioned COP as the event to watch in the fourth quarter. What came out of COP from your point of view?
So I think the headline for me, the COP agreement called on parties to shift away from fossil fuels. So that's a demonstration of progress from previous summits. So it implies a shift in energy mix towards lower carbon sources and sort of a call for sustained reductions in greenhouse gas emissions in line with a 1.5 degree warming scenario. Look, some commentators will say this pledge could be more ambitious and calling for phase out or phase down. However, the transition away from fossil fuel call was new and very clear. So I think we can expect to see governments committed to that, in particular working really hard during the course of 2024 in the run-up to the next COP, which will be in Azerbaijan, really looking towards upping their pledges and, tripling things like renewable energy generation capacity, which is a pledge that was also made in the context of COP. So I think that's pretty progressive. I think a couple of other things that we saw on the agenda at COP in particular was climate adaptation. So that's the work that needs to go in to ensure that our infrastructure is resilient and can adapt to the inevitable climate impacts that we will see because of where we are with global warming. We need to have a combination of mitigation and adaptation as a result. So we've seen a landmark agreement to support vulnerable nations facing some of the worst of climate change impacts, and that's with the Loss and Damage Fund, which has commitments totaling more than 700 million. I think that's really important. Adaptation had somewhat gone off the agenda, so it's good to see it back there because we do need funding to deal with, as I described, the inevitable impacts that we're going to suffer and continue to suffer.
And what's the outlook for this sort of bond issuance in Australia and Asia and New Zealand this year?
Certainly, we've had a pretty good start to the year in the labelled space from what we've observed across the APAC region. Now, you do see seasonal funding across borrowing entities such as semi-sovereign agencies, multilateral agencies, semi-governments, etc. at this time of year.
Katharine Tapley there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Monday, March the 4th. Catch you tomorrow with a deep dive into why the energy per capita consumption target expected to come out of China's NPC this week is so important. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.